AI, we've also seen a rise in data centers, and data centers, of course, need to be equipped with semiconductors, and those semiconductors need to be manufactured. So now we are in the midst of a semiconductor supercycle, as a recent report by KPMG suggested. What is the best way to play this supercycle without getting burned by the high valuations? Well, one way is when there's a gold rush, you should sell shovels. And this is a philosophy I've embedded on this channel since I first covered stocks such as Micron, a leading DRAM provider, and the stock is up 800% since that video. Of course, we have Nvidia, which I covered way back in 2020 and 2021. But this is not about the past, this is about the future. Now we will need to look at the market. Many semiconductor stocks have ran up massively, and we need to say, okay, where is their opportunity still? Because we have companies like TSMC, Taiwan Semiconductor Manufacturing, the leading foundry which manufactures all the major chips from all the major players from Apple to Nvidia. That gives that stock some embedded geopolitical risk, which even Warren Buffett subtly mentioned in a prior Berkshire Hathaway meeting. So in this video, I'm going to dive into another foundry player, a US player that has some very interesting prospects. With that being said, let's dive in. So a very interesting company to play this is a company called GFS, Global Foundries. Now, this is a company which AMD, of course, a leading chip designer, spun off in 2009. And this was backed by Abu Dhabi's investment vehicle, Mudabala. Now, one of the main reasons for this is AMD wanted to focus purely on design without having to do the huge amount of capital outlay which would be required for semiconductor manufacturing, especially specialist fabrication plants. And you may say, okay, Ben, isn't this company just competing directly with Taiwan Semiconductor Manufacturing, and thus it has no chance given the scale of that other company? Now, this company occupies a unique sweet spot in the foundry market. So it doesn't compete directly with TSMC for what are called leading edge nodes, but instead it provides mature node chips for automotive, aerospace and defense, industrial, and communications. For example, the company has received record design wins for its silicon photonics products for AI data centers. Even with those factors, the company is still the third largest semiconductor foundry behind TSMC and Samsung. Now, in terms of its financials, the company reported a gross margin record of 26.1%, up from 24.9% in 2025. Operating income, $826 million. Free cash flow, over $1 billion in free cash flow, with a very strong 15.7% free cash flow margin. Its revenue, $1.7 billion, tracking towards $6.8 billion annually. Okay, so what is the valuation of this company? Because we can see the stock has ran up substantially, similar to many other AI stocks. But still, it's still a $50 billion company, which is not huge in this AI semiconductor space. Well, if we model just 10% revenue growth, which is in line with their 2028 targets, a 35% gross margin by 2028, and a 15% EBITDA margin, the bear case is around $25 to $35 per share. The base case is between $40 and $55 per share, and the bull case is between $60 and $80 per share. So currently the stock at the time of recording is around $85. So it looks to be at the top end of the bull case. The market is pricing in continued growth as we are at the peak, what it feels like, of a semiconductor cycle. But that doesn't mean the opportunity is lost, because we can identify potential pullback points for entry points into this position, and also put defined risk options on in order to not lose any capital even during a crazy bull market. Now, if you want full details on how to actually identify these type of stocks earlier, we have actually developed a custom AI hedge fund system to identify stocks such as this, and also help you to enter positions and exit positions without risking your capital. As well, we have a second system which generates a consistent 20% returns per year in a very stable way. So if those platforms are interesting to you, feel free to check out the link in the description below to apply for access, because we don't give access to everybody. We have a very tight research community, and we look for the people who we think can actually benefit from these platforms and generate returns in the market. Okay, so that's today's video, and I'll see you on the other side.